All right, do you want to kick us off, Molly?
Yeah, so welcome everyone. Thank you for joining us for this webinar on mastering CDP disclosure, where we will be discussing key insights, trends, and future expectations for the CDP questionnaire. To quickly run through the structure of today's webinar, my colleague Chris, who will introduce himself in a moment, will provide a brief introduction to Aclara Advisory and a short background to CDP and the advantages of CDP reporting. Chris and I will then talk about some of the main changes in this year's questionnaire, alongside the main areas where businesses struggle and what they can do to bridge these gaps. We will then look at where CDP is looking to go next and what this means for your business, followed by some tips for success when completing your questionnaire. Finally, we will finish off with a brief overview of how Aclara can support you with CDP reporting, and then hopefully we will have about 5 to 10 minutes at the end for any questions. Please feel free to use the Q&A function in Zoom to send any questions you have during the webinar through. And any questions we don't get to today, we will send out responses to when we send the recording of the webinar. So to introduce myself, I'm Molly. I'm in my first year at Aclaro, and I've worked on projects around greenhouse gas footprinting, European energy regulations, and climate risk assessments. I have a background in climate research, and I've written research papers on topics such as TCFD disclosures and carbon offsetting. So I have a good understanding of the global regulatory landscape around climate. I'll hand over to Chris to introduce himself and Aclaro, and he'll take it from there.
Cool. Thank you very much, Molly. I need to request control as well. Nicely, seamlessly done. Good afternoon, everybody. My name's Chris Havers. I'm on the senior leadership team at Aclara Advisory. I've got 15 years in sustainability. 5 of those years was actually spent at CDP many moons ago. And I think for the purposes of this this webinar, the topic of CDP comes around annually for me as well. So I've had a good understanding of the evolution of the questionnaire, and what's got us to the point that we are today, and where it's going in the future as well. So hopefully I'll be able to impart some of that knowledge in today's session. Hopefully I'm just moving to the next slide. Does that work? There we go. So just a quick introduction to Aclara Advisory. Some of you already know this, but Aclara Advisory is we're a sustainability consultancy, and we have a bespoke way of working with many different types of organisations. We deliver a range of services which span across the sustainability spectrum, and often we will work as an extension of organisations' teams. And there are a number of people within the business who have a range of skills and expertise within different layers of the sustainability topics that you come across against in your daily lives in the workplace. And our aim is to translate sustainability ambition into those clear strategies and action plans, to make sure that you've got information that you can make decisions on and take forward into your current and future strategies. As I mentioned, we deliver services across a range of sustainability topics, from building sustainability strategies and the work that goes into doing that, such as the double materiality, single materiality assessments, understanding how governance can be developed within an organization, to then also having more of a focus on climate and net zero, where we specialize in footprinting, net zero strategies, roadmaps, climate risk assessments, and also supply chain decarbonisation. But then also spanning both of those topics, we also work on a number of reporting outputs and regulations, because we all know that reporting plays a key part in the annual deliverables that we go through on a yearly basis. So those are, whether it be CDP responding from a voluntary perspective, or actually the regulatory reporting, such as UK-based regulation CSRD over in Europe, and then also the upcoming ISSB related reporting, and a wider range of other topics. So let's delve really into the topic of CDP. So as many of you may well know, CDP's been around for best part of 2 to 3 decades now, and traditionally started off as the Carbon Disclosure Project, which was all about providing climate risk and carbon related data to investors, so they could utilize this information to actually understand how will the value of the pension funds that you and I all invest in, how will climate change affect the businesses that we are investing in on a daily basis. This has developed over time to incorporate a wider spectrum of the environmental topics, which are important and have many linkages. So now today we're seeing not only climate change issues, but also the exposure of businesses to water-related issues, deforestation, and also very recently we've had the inclusion of biodiversity, plastics, and now the topic of oceans. So really what they've been doing is building up this ecosystem of questions which organizations are providing their insight into to help investors, but then also supply chain based customers, how these topics are affecting the running of their business both now and also into the future. Let's move to the next slide. So the success of CDP really is in the organizations that respond to it on an annual basis. And I'm sure many of you have seen the graphs. The number of organizations builds up, ticks up and up and up every year. So now really, if we start to pull together both the investor questionnaire and also the supply chain questionnaire as well together, we're looking at over 60,000 organizations which are disclosing information through the different portals. As you can see, the total number of investors that this information reaches to is an obscene amount of they represent an obscene amount of money when it comes to assets under management. If we look at $127 trillion worth of assets under management. So as you can see, this information that's been provided is really dispersed far and wide, and even the growth of the number of organizations is particularly large. If we look at 4,500 organizations disclosing CDP for the first time in 2025, that's a 8% increase or 7% increase from the previous year to 24 to 25. So its success continues to build, and I think that's while many of us, when we get into the reporting cycle, it may be very long and it may be involved and it may seem quite arduous. The value that we can get out of CDP does actually have, if utilized properly, can actually help organizations develop year on year in terms of where should they be going and what should they be doing next. There is a slight delay when I try and change the slides. So maybe Molly, if you help me out on that one. Thank you. So in terms of why organizations report to CDP, there are a number of them. So we have the ability to inform investors, especially from the stock market listed PLC's perspective, inform them of the information, because this data gets it's not only stored on, for example, the CDP website. CDP has data partnerships where this information gets dispersed into things like the Bloomberg terminals or the trading terminals. So that information is accessible through certain platforms. There are benefits such as helping organizations with report regulatory compliance, because taking part in this questionnaire allows there's a lot of alignment with regulatory requirements, and so actually it can be taken as a bit of a practice bed in order to you disclose once, you can store that information, then actually you can start to pull that information out for regulatory outputs, and in order to keep that kind of solo narrative working through different outputs. There is a benefit in terms of risk management as well, because again, there's a lot of emphasis of questions within that risk management side of things, and so being able to work your way through these pretty in-depth questions allows you to go through that process of understanding what the information required to go into it, because CDP provides a lot of in-depth guidance. So it's actually a learning tool in order to understand how the range of risk that could be affected by your organization, and then also applying that specifically to yours so that you can actually go through the process of understanding yourself. And then obviously there's things like competitive edge, because we all want a good score, and that information we can utilize on the outside world in order to kind of showcase with your score to say, this is representative of us managing this issue, and you can have trust in our brands and such. So it allows you to build a strategic foundation based on this score that's provided, and then also the answers from the questionnaire, which allow you to then take that forward into your strategy. So I think, Molly, I'm handing back over to you now.
Yeah, so thanks for kind of providing that background. So now we're going to talk about this year's changes, and I will start with a high-level summary of key trends, and then Chris will provide a more detailed look into the changes. So as many of you will know, 2024 saw significant changes to the CDP questionnaire. These changes were centered around integration, diversification, and alignment. So in terms of integration, climate change, forests, and water, rather than being 3 separate questionnaires, are now combined into one single questionnaire. And as a result, the modules were integrated to cover all themes rather than asking the same question for each issue separately. So this reduces the ability to treat issues as standalone. These changes reflect a recognition of the interrelationship between environmental impacts and a desire to reduce the administrative burden for reporters. In terms of diversification, the scope of disclosures was extended to biodiversity impacts and the use of plastics. This reflects a trend towards nature-related disclosures and an acknowledgement that climate targets are insufficient without nature protection, with a high level of codependency between climate and biodiversity. Alignment with the ISSB and the CSRD was perhaps the primary driver behind the 2024 changes, and led to a stronger emphasis on governance and financial risk, as well as setting out clearer expectations around transition planning. It enabled CDP to become a central port of call for compliance with international climate standards, preempting the adoption of mandatory national standards. So, for example, in February, we saw the publication of the UK Sustainability Reporting Standards, which are aligned with the ISSB and will become mandatory for listed companies from 2027. So the 2026 changes largely reflect a continuation of the themes in 2024, alongside a shift of emphasis from awareness and mitigation to management and adaptation. As the impacts of climate change become more tangible and the potential for financial consequences become clearer and closer, adaptation and risk management are at the forefront of investors' minds. This year's changes reflect that, with more detailed questions on transition plans, which incorporate the growing expectation that these cover adaptation as well as mitigation, and more questions on how risks are assessed and managed over time. CDP has also increased questions around target setting for water and plastics, which Chris will talk a bit more about later. In terms of diversification, CDP continues to extend its nature-related disclosures, with the introduction of disclosures on oceans, which I'll discuss more on the next slide, and the inclusion of cocoa, coffee, and rubber in forest-related disclosures, meaning CDP now covers the 7 major forest risk commodities that cause the majority of deforestation globally. Optional forest and water questions have also been introduced for SMEs. And as stated earlier, CDP also continues to align with international standards. This year focused notably on the TNFD, so that's the Task Force for Nature-Related Financial Disclosures. The inclusion of ocean disclosures now ensures CDP covers the 4 TNFD categories of land, ocean, freshwater, and atmosphere. And this comes after ISSB announced in November 2025 their intention to begin the process for a nature-related disclosure standard based on the TNFD, though they have since shifted to promising a practice statement, of which a draft is expected in October. Despite this cooling of commitment, it still illustrates that CDP continues to stay ahead of developments in environmental reporting and investor demands, highlighting the value of completing a CDP response for businesses. There are also moves to further align with Ellen MacArthur Foundation's global commitment for plastics and moves to align with upcoming updates to the GHG Protocol corporate suite of standards, which are expected to be published at the end of next year, as well as the GHG Land Sector and Removal Standard, which was published earlier this year. Primarily, this entails more detailed and granular Scope 2 reporting and a repositioning of removals to sit alongside land sector exposure. Overall, these updates reflect the growing trend towards integrated and standardized sustainability reporting that provide a clearer, more comprehensive picture of corporate impact and response. So as mentioned, a notable change in this year's questionnaire is the introduction of ocean disclosures. This extension reflects a growing demand for ocean disclosures from financial institutions, among other international organizations, and wider trends in sustainability reporting towards nature-related disclosures. They recognize the environmental and economic significance of oceans, which absorb 30% of global emissions and contribute $2.5 trillion to global GDP annually. And both these capacities are at risk of being greatly reduced by climate change. This year, ocean disclosures are optional and will not be scored. In 2026, they are aimed at sectors in the blue economy, such as fishing, shipping, and offshore energy. Disclosures are focused on assessing awareness of the risks and impacts companies have around oceans and how companies are embedding these into decision-making and transition plans. Disclosures on quantification, target setting, and risk management will be incorporated in future. So I'll now pass on to Chris to talk about the 2026 changes in more detail.
Thanks, Molly. So yes, I'm sure many of you will be breathing a sigh of relief if you're not part of the blue economy, and you think I don't have to grapple with another questionnaire. But that said, I think the changes that are coming into play, we don't want to overstate the size, because the questionnaire has entered a period of stability, but saying that, there are always tweaks and changes, and there are always little surprises which occur within the different sections of the questionnaire. So within the forests questionnaire, for those organisations taking part in that, a key area really is around the performance module, really, because there is integrating modifications to how organisations are reporting no deforestation and no conversion targets, and how they align with certain standards and impacts. And then also there is increased amounts of disclosure requirements for organisations which are exposed to these 3 key commodities: cocoa, coffee, and rubber. And now that information is also now being absorbed into the kind of sub-scored commodities section as well. So there are a few amends which are aligning things around the target setting frameworks for within the forest area. Water specifically is having some amends again within the performance side of things, so the water performance side of things. This is integration of the science-based targets for nature work, which has been happening in the background, and that information is then being integrated into how organisations are portraying their targets and the information that's based based within that quantification of those targets, with a little bit more information as well around wastewater treatment, which has been added into the questionnaire as well. There's also a little bit of a modification within the module 2, which I've named here the DIROs. That's the dependencies, impacts, risks, and opportunities section. This is really focused on measuring pollutant management procedures. So again, some minor amends, and may kind of surprise you with a new question or two within that module 2 section. Then on to the next topic of plastics. Molly, if you can pop forward, thank you. As Molly mentioned, the CDP is trying to build that alignment with the Ellen MacArthur Foundation's global commitment. And so really what this represents then is, again, within the performance section. So for the plastics perspective, module 10, if your organization is exposed to that particular module, there are a series of new questions which are related to the targets on kind of plastics, reducing the plastics that get extracted from your organization, and also how that relates to types and proportions of packaging formats, and then how packaging is designed for recycling and composting, and the volumes of products which are sold through the different reuse modules as well. But again, this has not been scored for this year, so it's really an opportunity for organisations to understand what the questions are, take that information internally, and build up that approach, build up internal support, should we say, and understand, does it affect you as an organisation? Is it valuable for you to be kind of integrating these things, and therefore taking that information further and making decisions on that? And then finally, we get to the climate change questionnaire, which affects all organisations in terms of their response. As Molly mentioned, there are amends currently under consultation with the Greenhouse Gas Protocol. Now, these changes are still going through a process, and will continue going through a process for the next year or so. So therefore, there are not radical changes with that, but there are preemptive changes which are occurring, particularly around those greenhouse gas protocol standards. The scope 2 changes for organisations which are taking part on behalf of the RE100 club, we'll call it. There is some more specific information around scope 2 reporting, which is related to time matching of renewable energy, and also supply agreements. As some of you will have known, if you're up to date on these proposed changes to the Greenhouse Gas Protocol, these are in the pipeline for that. So I think RE100 is probably getting ahead of the curve on this, and therefore that information is filtering through into the CDP questionnaire. Some of you exposed to the land sector and removals accounting practices will have known as well that there was a standard released at the end of 25, I think it was, and so there have now been shifts with CDP to incorporate that information into module 7 as well. So if your organisation is exposed to emissions from land sector and removals, then that will guide you down a kind of a new question pathway within module 7. There's also a little bit of extra information on climate transition planning as well. So some extra detail incorporated into that, which is kind of linked to the adaptation and resilience area that Molly mentioned earlier. In particular, the organisation CDP is trying to differentiate between responses which are based on adaptation and responses to particular questions which are based on the resilience of an organisation. So therefore, what you will find is new drop downs which are being incorporated into particular questions, such as the opportunities section, climate transition planning, value chain engagement, where the initiatives and the mitigation strategies you're kind of labeling as, is it an adaptation response or is it otherwise? So it's extra little bit of detail, which is focused on just trying to differentiate. And then also the standards for verification have been updated as well in order to align with CSRD related assurance standards. So that's kind of the general overview of the climate change questionnaire and also the other ones. And I think really this reflects an area of kind of a year of stability. So what we've deduced from that really is that while the questionnaire remains unchanged, it has really strong continuity, and it's still building that alignment with the old TCFD foundations, the upcoming IFRS reporting standards, how that links with, for example, UK SRS coming up over here, but then also other countries. The UK has been slower to adopt the IFRS standards, so other countries have already moved on this ahead of the UK. So there have been environmental issues, forest, water, and plastics, which are having extra changes occurring, but the climate change as a topic is staying relatively stable. But you're always going to notice a few extra drop downs or maybe an extra column within questions. So don't be surprised if you come across these things on a number of the questions, really, because it always takes people by surprise. But ultimately, they are continuing that integration, which is happening on a global scale in terms of integration of the frameworks and standards, and making sure that there's kind of the information is really aligning together and not going off on their own separate tangent. But really, what organizations should be doing is using this year of stability as a way of honing their ability to report within the IFRS frameworks. So there are a few what we'd call struggle areas, pain points, and reporting gaps, which are hung over from 2025 and will probably likely be still around in 2026. So first one is transition plans. I think there are many organizations out there who may not understand fully what a transition plan exists, what a transition plan consists of, because there are, within the CDP scoring realm, there are, I think, about 13 or 14 different elements which make up a transition plan. And really that transition plan is focused on how an organization strategy starts to pivot not only the operational targets, the net zero operational target, but also pivots its assets and also its whole business model and financial planning, aligning with the latest environmental science. So often what we find is organizations are portraying a transition plan, but really it's only focused on the operations of the organization. So I think really a key learning of that is some companies are finding that they open up they say, yes, we have a transition plan, but then once that part of the questionnaire is opened up, it opens up a whole realm of new questions which are unfamiliar to organizations. So if you feel that you only have a partial transition plan and you don't feel like it can actually achieve the full scoring of that particular section, sometimes it's worth actually just saying, no, we don't have one, but we're developing one in the next 2 years. Taking the information on, learning from that, and then starting to build that up for the next year. Another pain point that organizations have or are coming across at the moment is around their target tracking and progress. A lot of organizations have their net zero targets, their science-based targets, but actually are starting to approach the interim target dates for 27, 28, 29 or 2030, particularly in the scope 3 indirect emissions realms. And what we're what we're finding now is that because we're actually getting quite close to those organizations are then actually starting to lose a bit of credibility because information is not, the data quality isn't up to the scratch of understanding whether reductions have been made according to those targets, because there may have been inconsistent methodologies that have been used year on year. And data quality hasn't transitioned from kind of a broader estimated approach based on spend to then kind of more specific data. So really organizations are going to probably come across a struggle area when it comes to highlighting progress towards those interim targets, which are now starting to fast approach. So really the long-term action which needs to be taken from that is how do we transition our data quality to ensure that we're able to then show and track progress towards those targets moving forward. Another area of pain can be around scenario targets. Many organizations have gone down the route of actually conducting the scenario analysis. But when it comes to their disclosure, it kind of feels like they get bogged down in the technical detail of what the scenario analysis is, and actually there's a disconnection between what that information is doing and what it's influencing in terms of its strategy. So try and take a step back from the RCPs and all of the technical ins and outs of what that scenario analysis is, and try and provide the users of the data an understanding of how this output and information actually equips your organization to make decisions for the risks and opportunities, and linking it back to the risks and opportunities that have been associated, that have been identified by your organizations. So try and start kind of from maybe a simpler approach to understanding how you actually use that data. And then also a final struggle area highlighted here is around the integration of nature beyond climate. And sometimes what we can see is a bit of a disconnect within the flow of a disclosure. So what I mean hereby is it might be that the organization suggests that or states that there are risks in a particular topic, so the topic of water, for example, and so they highlight that there's a high level of risk, but then actually, as you start to work into the topic, that understanding of that risk doesn't then translate into action, and it doesn't then translate into how that particular topic is governed, and therefore it kind of leads to a potential paradox of is this information actually material to the organization, or has an organization been trying to disclose that it has risks in the area, but actually it's not exposed to that much of a risk, and actually it could have taken a different question pathway, because there's a lack of understanding of how that risk can be managed and how it's governed in particular. So sometimes an organization needs to kind of take a step back again and think, okay, is this particular area a material issue for us, and are we portraying this in the right way through our disclosure? I think that leads me on then into kind of the key theme of challenge for organization, and that's how they utilize their disclosure, because as we said, it's a stable year for the questionnaire, and so there's not a huge difference between the score for organizations when it comes to the scoring from last year to this year. So I think a key thing is for organizations to be using this year as a preparation for the IFRS based reporting going into the future. And the key thing around that is to make sure that there is a clear storyline which runs through the disclosure, and this works from the risks and opportunities, but then how this information is then connecting into the mitigation strategies and the financial planning of the organization, and then feeding its way into the strategy. So I'm going to go through a bit of an example of this, but ultimately we 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 really want to be pushing with companies that we work with is there a clear storyline that runs through from the beginning of your questionnaire all the way through? And I'll try and kind of bring a little bit more information out on the next slide. So we kind of called this a question of connectivity because I think what we find is some organizations lack that connectivity between questions where within the beginning part of the questionnaire, for example, sections 2 and 3, and then as you get through into the sections 4 and 5, that narrative starts to fade out, and it really doesn't connect the dots between the responses. So what we've done now, and we can circulate these slides to people to get a bit to delve into them a little bit more, is to help organizations understand the flow of information. So if we look at the middle in the topic, we have the first part is around risk and opportunity identification. So the aim is here for organizations to establish financially relevant environmental risks and opportunities. But you should really be using these sense check questions at the bottom of the slide to understand, to kind of reflect back on this part of the questionnaire. So in terms of risks and opportunities, you want to be taking a step back and sense check and saying, are we really describing the real risks to the business that we face, or are we just describing theoretical exposures? Because then that information then needs to materialize into the financial impacts. And then you want to be asking yourself, do the numbers here actually credibly reflect the risks that you're describing? For example, sometimes you'll have a huge major risk which is established within questions section 3, but then actually when we start to look at the level of financial impact on the organization, it will suddenly drop off, and it will be a factor of maybe 0 or like a very insignificant amount to the organization. And so if that's the case, we always recommend for organizations to try and kind of build up the narrative and explain why there's suddenly this big drop off in numbers. So making it very explicit about what's residual risk and what's inherent risk. And then this information can then kind of carry on flowing through into the mitigation strategies, and then how that information is then linked in with the business strategy and the financial planning going into the future. I'm going to flick on to the next slide. I'm aware that we've got a few other slides to get through here. So here's just a few examples of those connectivity gaps. Another example could be, for example, there's describing in section 3 that there's no environmental risks, and saying it's an immaterial topic. But then in section 4, all of a sudden, the topic of responsibility actually sits within the CEO or the board. So it might be that you'd say, no, we don't have any material water risks. But then in section 4, it will suddenly be that water as an issue is a topic of responsibility, a key priority for the CEO and the board. And all of a sudden, there's a misalignment as to why that's the case. And so adding extra narrative within that helps the reader to understand this kind of flow of information. Okay, I'm gonna pause it. I'm gonna pause it there, and we can move on to the next slide.
Cool, thanks, Chris. So we'll just have a quick look at kind of what's next for CDP. Just before I dive in, I'm just making a note that these are not definite or confirmed changes. They're kind of they're intended to reflect potential updates based on Aclara's research and CDP's strategic direction and kind of things that they've indicated in their publications. So in summary, interoperability remains a key priority for CDP, alongside shifting to more forward-looking and granular disclosures. These 3 points on the right highlight some specific future focus areas. So on transition plans, ensuring they are backed by financial investment and are aligned with financial planning will become increasingly important in determining whether transition plans are credible, kind of as Chris already spoke about. CDP has flagged that only 9% of reporting companies in 2025 are actually investing in adapting their properties and assets in response to environmental risks, despite the total estimated impact of reported physical risks being around 1.5 trillion US dollars. CDP has also identified a recognition gap around extreme weather risk, with 62% of cities, states, and regions already materially impacted, but only 35% of companies identifying extreme weather as a financial risk. So businesses should expect increased scrutiny from data users of discrepancies between plans, actions, and realities in future years. Again, this aligns with what Chris has said about connectivity. CDP will continue to develop its nature-related questions, strengthening its alignment with the TNFD, refining its approach to biodiversity, and refocusing beyond deforestation to land use. CDP is also looking to build in the concepts of nature and resilience into their questions on transition plans. This includes incorporating circular economy principles with a focus on processes to eliminate waste and pollution, reuse products, and regenerate nature. Circular economy metrics will be sector specific and based on priority sectors identified in the UK's Circular Economy Task Force. And then finally, CDP is closely monitoring the updates to the GHG protocol, which as they are already incorporating, but as the changes are finalised, the questions will be adapted in response. This mainly entails aligning sustainability reporting more closely with financial reporting, ensuring Scope 2 data is more granular and better evidenced, and that Scope 3 data is comprehensive. And then there'll also be a full alignment with the land sector and removal standard in 2027. Now I'll pass it on to Chris to discuss the tips for success.
And just finally, as we're drawing to a close now, I think there's always some general things which organisations can do to make sure that you maximise the score and make sure you don't lose kind of silly points within the CDP process. One of those in particular is the second one here. Don't leave cells blank. Ultimately, if you click a no to a particular question pathway, that is always better. And explaining why you've done that, that's always better than leaving a question blank because you don't think you should disclose that you don't do something. Always, if there's a table that's provided, make sure you're answering all of the questions within that table, because often what you find is the scoring is based on the proportion of that table that has information within it, and you're going to want to kind of build up your base level disclosure points so that you're able to then be eligible for the latter management points and the leadership points. That goes again for the if something is a 0, don't leave it blank. You put a 0 in there ultimately, because otherwise, again, that will be deemed as a blank cell information. The first point is around the reporting year. This is, I guess, always been a conundrum for organisations based on, if they're reporting the calendar year and then it feels like they are reporting 9 months later as the CDP questionnaire comes in and they've done things since then, and all of a sudden they want to actually highlight the fact that they've improved and they've done things further. We are actually now shifting to as ever more alignment with the likes of the IFRS, and so it's probably more important now than ever to kind of keep things aligned within your reporting year, because you're going to want information to be you're going to be wanting to tell the same story really within your annual reports and within the any kind of IFRS related reporting as well. So our recommendation would be to try and keep things aligned within that reporting year that you're describing. And then finally on the consistency, so make sure that you're reporting consistent responses. I know sometimes it feels like you're repeating yourself all over and over again. But there's nothing wrong with cutting and pasting the same answer if it is in fact the same answer, rather than saying please refer to previous questions. Because as I mentioned, uh, this data gets pushed through into things like Bloomberg terminals, and a user of the data may not have your whole questionnaire to then start referring to uh, other explanation questions. So that repetition and ensuring that consistency is always valuable. So thank you very much, everyone, for joining the session. At Claro, we've got a number of years of experience within the team where we help organize who can help organizations with their CDP reporting. We offer different levels of reporting for those who are in the beginning stages. If you're a new organization ready to respond, so we can go through what's called a readiness check. It's kind of an entry level assessment to see how prepared you are for CDP reporting. Likewise, we can do a scoring insights check as well, which is often done within that kind of summer period as organizations are gearing up towards kind of clicking the disclosure button, and they want to have an organization third party review their score to see review their answers to see whether it hits and achieves the scoring perspective. And also, as I mentioned, you can actually take a third party review to understand if your narrative is actually coming and working its way through the questionnaire as well. So it doesn't have to be based on scoring insight. And then also we offer what we call enhanced reporting as well, which is where we can take control and ownership of the response and then engage with stakeholders from across your organization to help then kind of build up your response and build upon the previous year's worth of responding. So we are here to help, and please do reach out if you'd like to talk about this and see what we can do for you. So I think we are probably at our end point now. So we have had a couple of questions come in, which we will respond to in the post. We'll respond to them individually at the end, and may actually do an email where we're responding to those questions and open up the response as well to everyone. But if you do have any further questions, please do email me. My email address is on the slides you can see now. I'm always happy to talk and see if we can help you out in the future. So thank you very much for joining, and hope you have a nice day.